So today we're joined by Akshay, who is quite an interesting individual, because he's doing a lot. He's doing a lot, and my interactions with him have been nothing short of amazing. But enough about me and how I met you. Akshay, why don't you do us a favor and introduce yourself?
Yeah, sure. Alex, first of all, thank you for having me on. My name is Akshay Shrimanker. I'm a CPA. I'm the founder and CEO of a company called Shay CPA. We specialize in helping early stage technology companies with their financial reporting and tax compliance and R&D credits. And yeah, that's an area we've been in for a little over a decade. We are a boutique firm. We're about 15 people, and we kind of split down the middle. Like half of our team works on accounting stuff, helping founders with their bookkeeping and financial reporting needs. And the other half of our team is really laser focused on the tax side with corporate tax compliance, helping Delaware C Corps, helping them with their state compliance, estimated taxes, and then where we can, we try and help out with some R&D credit work as well.
And that's going to be interesting, right? Because we are now that, well, in my world, right, now that the R&D tax credit is something that is more amenable to small and medium-sized businesses. We are getting a little more of the, hey, uh, we're not profitable yet, we're just starting out, we're just trying to get our legs up under us. And you know when you're bootstrapping, depending on where you're at in this process, for instance, yesterday I had a conversation where their physicist is also their tax preparer. Uh,
Hey.
it's they have a physicist who is their tax preparer, their accountant, their and for me, there's a head scratcher of, I understand that you have insanely intelligent, bright minds, but there is a lot of nuance that is required for you to understand how to do these appropriately. And I imagine you are inheriting a lot of folks who said, I don't know, I just put it on an Excel spreadsheet. I just figured anything that we spent money on goes in this bucket. Anytime money comes in, it goes in this bucket. It should be okay, right? But so how's that work out for you?
Yeah, so I think like the R&D credit process for us kind of starts at different stages. So because we're involved on the bookkeeping and accounting side, one of the first things that we kind of help our clients with is something called a functional P&L. So what a functional P&L is, it basically breaks out the P&L by department. So if you were to just like use the QuickBooks P&L out of the box, right? There's no real, it's just everything's just in alphabetical order. There's no real division between the different departments that you may internally have. So the way that we initially structure the chart of accounts is we break out the R&D away from the G&A, the general administrative, away from the sales and marketing. And I think that's like really the first step where we can kind of zone in and isolate those research and developmental costs and say, okay, you have your salaries, you have your benefits, your payroll taxes. Um, there are certain cloud computing costs you have. So some of your AWS spend, is going to be there along with other software subscriptions that you have that your developers are using to build the R&D. So even if 100% of that doesn't qualify as a qualified research expense on the R&D credit form, that functional P&L and just separating the R&D away from the sales and marketing, away from the administrative stuff, for these early stage companies, it really acts as like, okay, this is our starting point.
Mhm.
Let's start here. And then from there, we then go into, okay, how much of this was domestic, right? Because for the federal R&D credit, it's really boots on the ground in the United States uh, that qualifies. Uh, and then we go through, okay, is this a 4-part test or is this the 7-part internal, use software,
Mhm.
right? Like which category is this research really in? Our business, we focus on working with a lot of venture-backed tech companies. So typically the use of the software is external in nature. So these are like enterprise B2B SaaS companies or early stage biotech or pharmaceutical companies that are doing drug discovery, drug development, or they are building, I don't know, like a bioinformatics platform, right, to do like computational biology, like the stuff that's like I don't fully always understand exactly what these founders and companies are doing, but it's really fascinating stuff, and a lot of it does qualify for the research and development tax credit. So that's usually like our starting point. It's like let's look at that functional P&L, zone in on the R&D costs, and now we kind of go through all the different tests that we have to go through. And the big other aspect in R&D as well is this funded research, right? Is this being funded by the federal government or any other agency? And yeah, we've had some interesting clients over the years that some kind of, even if it is funded, they will argue that somehow this still does qualify for the R&D credit. And sometimes they may have a point, and other times it's going to be difficult to justify that. So yeah, so that's kind of, hopefully I answered your question. That's the starting point.
So I mean, for me, this it's also a question of just in general, right? There are oftentimes for most companies in organizations as a whole, the accounting function, and I would argue like a good portion of say finance as well, and just general finance, depending on scope and scale of companies. You know, accounting function is usually kind of considered a sunk cost. Like it's just something that doesn't really necessarily drive revenues, and so if people are trying to scrimp and save and whatever, it usually tends to be in that arena, right? Especially, well, at least from where I've seen, it seems to be for the small, like the mom and pop shops. Typically, they're like, I'm not going to hire a bookkeeper. I'll QuickBooks this myself and all this. And for me, my concern always becomes, can you do it? Yes. Can I also stitch myself? I can do. I could probably, right? But should I? Probably not. Probably not. And this is not for me to say that everyone should absolutely always have a bookkeeper. It's a case by case. But I think for me, the pivotal thing here is going to someone like yourself and your company to say, hey, let's at the very least let's get the organization down, because whether you claim the credit or not, it doesn't matter. The fundamentals of, and again, let's be fair. We are going to be a little biased because this is what we work on, right? But how many times have you seen someone kind of winged it, right? And then they realize, oh, I'm way over my skis, or like actually no, let's take a step back. What are some specific instances where you would really just say, hey, whether you're going to be my client or not, you really, really, really should go have a professional get your book cleaned up. Let's start there.
Yeah, great question. Great question there. Yeah, so we do often get clients that, it is sort of that stereotypical shoebox full of receipts type of scenario where they don't necessarily have their big books in order. And I would kind of divide like some of our clients in different sort of, I guess, personas, right? So there's those folks that are extremely detail oriented. They want their books to be done right. They attach receipts to every single transaction record in QuickBooks, or they have like a personal assistant or someone doing that. And then there's other personas that they're so focused in on just, whether it's fundraising or building their product or building their team, that the accounting can sometimes take like really a back seat, right? So I think the first step is like understanding those personas and meeting them where they're at and seeing like how much handholding is this individual going to need to take that shoebox full of receipts and turn it into QuickBooks,
Mhm.
or turn it into a financial statement that the bank or a VC or an angel investor is going to understand. And fortunately for me and for the businesses that we work with, um, there is, I would say, like a high bar that VCs and angels do expect as far as founders knowing their numbers, right? They really need to know their, how many customers they have, how many customers churned. Some of these numbers, like their MRR, ARR, it's almost like enshrined, I would say now in Silicon Valley, and that these are metrics that founders need to have at the top of their minds at any given time. So if they're in an elevator and they have to give a 45-second speech to a VC while they're in the elevator, they can give them that number. So we've been fortunate that most of the founders that we work with they at some level have been sort of trained into this environment of they need to know their numbers. So they are a little bit more amenable to, taking recommendations like, hey, we need to set up QuickBooks, we need to organize things in a certain way. But it's almost like there's like two levels of accounting, especially in this VC tech space. There's the accounting, which is like the GAAP
Mm-hmm.
accounting. There's the accounting, which is like what needs to be shown to the IRS, which is usually accrual or cash basis. And then there's like the VC sort of growth metrics, growth at all costs. You kind of have this like inverted hockey stick style of, showing numbers growing. And that part of it is where there's a lot more creativity, I should
Mm-hmm.
say, when you're like projecting out, whether how big your R&D team may be. So one of the things with the R&D credit is like when we're helping our clients, we try to ground it in realism.
Mm-hmm.
And a big differentiator for what we do compared to what some other folks do is that we really look at cash flow. That's really the first thing that I look at with our team when we're deciding whether, okay, this client is a candidate for the R&D credit. Many of the clients we work with, they are early stage tech companies, so they are operating with net operating losses, meaning they're not showing taxable income. And the federal R&D credit can really be used in two ways today. One, as you know, is to offset your federal income taxes. And the second way is for qualifying small businesses, it can offset your payroll taxes. However, when it comes to offsetting payroll taxes, that time horizon, it doesn't offset retroactively.
Mm-hmm.
It offsets in the future, right? So that's one concept that a lot of founders, when they're looking at the marketing of the R&D credit, and that oh they're going to get all this money back, they don't fully grasp that aspect. That hey, like if I want to take this R&D credit, I actually have to look 12 or 18 months into the future and say, am I going to be running payroll then? And if I am, has there been any type of reduction in force by then, which will then extend how long it takes to actually get that benefit of the R&D credit. So I sometimes joke that I'm not the best salesperson for the R&D credit because once I ground it in that realism of like cash flow and whether like let's project this actually out and seeing when you're going to get these benefits,
Mm-hmm.
and then founders make the call of oh yeah let's go ahead and do it, or you know, uh, this may be we don't even know if we're going to be around 6 months from now.
Mm-hmm.
so so yeah.
This could be my argument, right? I think that's what you need, right? I mean, for me, there's always going to be a never-ending list of incentives you could take advantage of. Right? It's like I'm sure I don't know of too many CPAs that don't have some semblance of like, hey, Bob, I heard that you could claim this deduction. Oh, I heard you could claim this, that, third. I think I'm gonna do the same. And usually the answer is no. It depends. It depends, man. Like, did you? For me, first and foremost, is did you check the appropriate boxes? Do you actually qualify based on the criteria laid out by the IRS, or are you listening to your drinking buddies at the bar and saying, "Hey, like, well, John claimed it." Well, John's scenarios are different, right? Secondly,
Right.
it's a question of is the juice worth the squeeze, right? Like this is where, yes, it is ultimately going to be up to the business owner in most cases, outside of like say legal compliance. But even then, like if you want to win stupid prizes, yeah, go ahead, play stupid games. I just don't want to be in the passenger seat with you, right? But
Yeah.
it's one of those things of like, hey, what is the risk? What is the cost in terms of how much more work do we need to do? Is there a legal risk? Because there are, unfortunately or fortunately, a lot of areas in the tax code, for instance, where it's not black and white; it's gray, right? And so it's for me, it's one of those things where, to your point, can it be helpful? Absolutely, but can it also be detrimental or useless? Absolutely, right? And so this is like one of the few things where, over the conversation that I've had with you, I really enjoy that portion of it. It's like, look, I don't mean to be, a Debbie Downer, but like maybe this isn't useful for them. Perfect. Like I think that instills more security, right? Because for me, generally, as I speak with other clients, because we don't work with general tax prep, right? We handle one little segment and then we hand it off to other offices. We often get one of the extremes. Either one is always no, no, you can't do that, don't do that, and then we'll tell them why. Or every once in a blue, you get a cowboy who goes, "Oh yeah, absolutely. We just, you just got to make sure this, and this done." But like, yeah, it'll work. I'm like, the middle ground, I think, makes the most sense. Can you? Yes. Is it right now? Maybe, maybe not. Right. But if you do want to do it, here are the steps, and also understand that these are your risks and this is a potential reward. So if it fits your needs, let's go. If not,
Let's
we
go.
move on.
Right.
Right. And I imagine you're going to get a lot of those, especially when I feel like your particular realm, and correct me if I'm wrong here, right? Like, there's more considerations where like, hey, we it's not just us. It's not just me and my family or my buddies who we start a company with. It's like, hey, we have people who need to look at our financials. And secondly, I imagine that there are going to be folks who don't quite understand this, like the downstream effects of having proper bookkeeping, for instance, right? And could you kind of fill me in on some of those? Because I'm sure there's gonna be a lot of folks who just think bookkeeping is just for me, right? And I beg to differ.
Right. Well, I guess there's two aspects here. I think post COVID, just with having remote teams, has changed a lot
Mm-hmm.
when it comes to bookkeeping. And that's why we've had this rise of what they call like spend management platforms. So these platforms where like everyone can have virtual cards or different types of credit cards, because we are like very much now distributed. So bookkeeping used to, pre-COVID happen in, one office in downtown, whether it's New York or Chicago, wherever it is, like you had this office where bookkeeping was happening. Now, bookkeeping is something that's happening, wherever your team is.
Mm-hmm.
And that could be in multiple jurisdictions, multiple states. And it's happening basically across both cities and suburbs, right? Like it's everywhere at this point. So your records, your company's records are distributed in a way that it wasn't like this prior to COVID, right? And even though we've got the whole return to office movement now, it's still nowhere near where it was prior to COVID, right? I think it's like 50 or 60% recovery. I don't know what the exact numbers are, but it's still sort of getting there. So I think with bookkeeping processes now, what we're seeing is that it's pretty much, especially for early stage companies we work with, pretty much paperless at this point in most uh, you know in most examples, and it's really about organizing the sort of the thresholds that you use when it comes to like, hey, I need a source document for this. So if it's above $1,000, if it's above $2,500, I need a contract, I need the invoice, I need the W-9, right? And then you have like other expenses where it's like, it's an $8 coffee at Starbucks. And that's where you may draw the distinction of, do I need every single $8 Starbucks receipt? Yes, under the IRS rules, if they audit it, they want to see it. Um, but that's like a business decision again. Like, where do you want to draw that line?
Mm-hmm.
The IRS did release some guidelines around like tangible property, where they say, hey, like if it's under $2,500, you don't necessarily have to capitalize and depreciate it. If it's above 2,500, you do, and that really helped because now most computers are usually under that threshold, unless you're buying some gaming laptop or something that's really souped up with a lot of gigabyte and RAM. But again, when we work with companies, those are the questions that we ask is like, what are you comfortable with as far as record keeping? Where is everything going to be living? Let's set up a Dropbox, or let's set up a Google Drive, or let's set up, I'll name drop a few of the spend management platforms like a Ramp or a Row or a Brex. And this is how we're going to start organizing this distributed team that you have and all the different records that you have. Kind of getting back to the R&D credit, the record keeping there is, I would say, um, there's a high bar, right? So there's the actual payroll records themselves. There's the receipts and contracts that you have with your third party subcontractors or other research institutions that you may have involved. Um, but then there's the actual record keeping of what was that drug discovery that occurred during the year? What was that software development that occurred during the year? And that part of organizing that is, it can be a bit of a black box for founders and other people to understand. So they have different project management systems and things that they're using to keep that data organized. Sometimes they find that like having external R&D providers even looking at that, it's too proprietary for them. So when it comes to our service and providing R&D tax credit studies, they don't want us to have access to the GitHub
Mm-hmm.
records. They would rather just tell us
Mm-hmm.
the development that happened. But now, if there's an audit and the IRS comes to look, they will want to see, they're going to want to see that, or they're going to want an interpretation of that in a way to say, hey, this is the work that happened during the year. There was this core platform that was built. There was A, B, C, D, E, F, G features that were also built. These were the personnel that worked on it during the year. And by the way, here's like every time we paid them, the pay stubs, the if there is any type of time tracking, and that's the big part here. And I'm not sure if you've ever seen any companies do time tracking the exact way the IRS would like to see it. Yeah, he's shaking your
You
head.
know, maybe
Yeah,
once, but over thousands of different, maybe once, maybe once.
right, right. Yeah, so that's like the biggest issue is like, how do you create contemporaneous documentation for companies that are trying to move at the speed of light, right? So these companies are moving so quickly, um, and some of them even die quickly, right? So some of our clients, they may only be a client for like 4 or 5 years. In that time, they may claim the R&D credit, and then it also becomes like who's going to keep all the legacy documentation, and that's another part of record keeping and bookkeeping is like actually who's going to keep that source of truth, because at this point what I see is everything is a 999 99 SaaS subscription where your company lives, and it's across multiple platforms that this these and as soon as you are shutting down your company, you're usually hitting unsubscribe, unsubscribe, unsubscribe. But it's like, wait a minute, hold on. Before you do that, you need to do an export of that data, because without that, if there's an audit from the IRS, you've just lost everything. Like you've lost.
Yep. And for me, it gets interesting. Especially over these past few years, at least in our realm, I've been seeing a lot more M&As. So you see a lot of companies either merging, being acquired, selling off. We're about to shut, or just straight up shutting down. To your point, and it's one of those interesting things because for those who don't know, there are two different ways for you to calculate the credit. Now, in the case of a merger or an acquisition, we still rely on, if you have access to the records from the previous phase of the company before you were acquired, right? And so if you don't have that information for baseline, it does become problematic. Now, I don't, to be honest, I still don't see it where it's like super prevalent, or it's like a industry standard where where even the VCs or whoever, even if they are aware of the R&D tax credit, for instance, they're not saying it's mandatory for you to have this, that or the deal's dead. But I am starting to see like one or two like here and there, and it's like trickling upwards of, as they understand, like as more people understand the incentive, they understand what the big picture of what they're looking at. Of like, for instance, did you just do this R&D tax credit right before the acquisition so you could like kind of bolster your EBITDA and your valuation, this, that, and a third? The savvy folks are going to be looking at you and saying, no, 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 no. But if there's a history of it, then they want to say, hey, what's the quality of the work that you've done? Right? The R&D tax credit, the package, if you're doing it correctly, should relay some kind of information of, on a consistent basis, we are driving innovation, we're doing it in a compliant manner, and we have receipts, right? And now I think what's starting to happen is, for instance, well, there's a client of ours, for instance, they went through this rigmarole of like, oh wait, we were supposed to have they were supposed to give us documents. I'm like, well, that's part of your negotiation with the company. But if you were to want to get into the context of, hey, we want to use this regular method, we need information from the start of that company. We need that baseline, otherwise it's not relevant, right? And so it will it really shift? I don't know, but I do see a slight uptick, at least in our arena. And so for business owners, if like it's fundamentals, right? I know that we are the accountants, the CPAs, and all that, and most people view us as like the pocket protector nerds of saying, "Hey, you got to be compliant." But there are potential real world dollars and cents effects to this, right? And right now it is year end, and I imagine now this is where people start to saying, "Oh, that's right, we did have this tax thing that's coming up," and I imagine there'd be a lot of folks who are still thinking, "Hey, I'm sure there's stuff we're supposed to do. When are we supposed to do it, and what are we supposed to do, right?" And I remember a conversation with you maybe a couple months ago where you were trying to get more folks to be proactive, right? And saying like, "Hey, even if you think you might need your books cleaned up, let's have the conversation." I think it might have been September, September, October, somewhere in that ballpark. Now we're in December, right? So for me personally, I cringe every time someone mentions like, "Hey, Alex, what should I do?" I'm like, "You should have done it." Anyway, in your opinion, as of now, mid December, what should folks be doing, and what's in your head? What are the deadlines for some of these things? Mhm. Mhm. Deadline. Yep. Mm-hmm. 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 Hmm. Yep, absolutely. And so for me, and this is going to be me being a little bit of a jerk, right? But if you're thinking just now, considering should I go reach out to someone to you're in my opinion you're probably already running late, right? Can it get done? Yes. Well, you probably yes, but I think from those who don't deal with this on a regular basis, where from so most founders, most business owners, most general payers, right? They just I think we lose in like sight of how much lead time should we have for things like this. And my usual response is whatever you're thinking, most likely it's gonna be double or triple that time. For not to necessarily get it done as a bare minimum, but to give yourself enough time without the unnecessary agita of like the stress of like, oh my god, we're gonna. If you haven't yet, go talk to your you know accounting and tax advisor. If you don't have one and you feel if you're questioning things, go find one. Even if it's just for a consult, you're paying for a consult. My usual thing here is like, look, I understand that. Let's say it's going to cost you $500, right? For like maybe a couple hour consult, or maybe it'll cost you thousands of dollars to have someone take on the work. But on the back end, what is the likelihood that they might find incentives and actually through proper bookkeeping, proper tax planning, proper console that you'll actually end up saving multiples of that money that you just spent, right? Was it is it gonna happen always? Probably maybe not, right? Because maybe you just don't have much in on your thing. But that's a good for me, a good person like a good tax advisor or tax person professional could probably sit you there and look. You might have to pay for the consult again, right? Because their time is money as well. And like you, every time I call you, I know you have like 15 different clients you're juggling at any given point, and right, so your time is valuable. But what if within the hour two or three, they could say, hey, look, it looks to me that these are your issues, right? Immediately, that's what I could sense, and this is what the pros and cons and risks and benefits might be, right? And from there, you make a decision. Hey, do we onboard? Do we sign with this person and say, hey, I need you to take care of my books. I need you to take care of my planning, or maybe one or none. I don't. It doesn't matter. But for me, it's like you don't ask a question and you get blindsided and you're like, why did this happen? Because you didn't ask a professional, right? Just like I'm not. I as much as I love tech stuff, I love nerding out on things. When an engineer tells me, hey, Alex, that that little widget that you're looking at isn't just a widget. That thing is a marvel. And I'm looking at it, I'm like, it looks like a bolt. I don't understand. Right? It's a layman like you're for me it's kind of like that relational thing of most times we talk to engineers, right? And they're like, well, I understand the math, I could reverse engineer stuff. I understand that. But did you understand there was a new precedence that came in? Do you understand that there was a change of rules that came in? And now, if you were not to consult a professional, who, and hopefully a competent one like yourself, right? So I'm gonna pat you on the back, Akshay. But it's one of those things of like, hey, understand that the ones who are good, they know what they're talking about because they've done this day in day out. They know the sniff test real quick rather than you wasting hours and days of your time when you could be driving the business. Just hire someone who has their 1,000 reps, right? And so for me, it's December, mid December. Again, I can't stress this enough. For anyone who is, for me, business owners, hands down, right? If you have a simple W-2, maybe a 401k, maybe a simple 1099, okay, fine, do it yourself or whatever. But if you have a business and you expect to take it seriously, and you don't have someone handling in house, go find someone. Go find someone. And sorry, that's my additional soapbox for the day.
Totally agree with you. Yeah.
Is there have you seen like an uptick of clients needing like kind of like somewhat of an overhaul, especially since the one big beautiful bill. For me nowadays, I'm tired of saying the OBBBA. I just call it HR1, but are you seeing more clients kind of needing like a hey, like I think we need to revisit and refresh and all that jazz?
Yeah, so I guess it depends in which capacity, like whether they need to be revisiting their like the Section 174 rules and seeing whether they could take advantage of like the amended returns. And so we have a couple of clients that we're looking at it from that capacity, but haven't seen any like significant um like someone like really combing through everything and seeing exactly. I think it's you kind of nitpick at the different areas. So like the three main areas that I highlight as part of HR1 that I think are important for founders. So the first one is bonus depreciation. So bonus depreciation is now sort of back, and it's interesting because it goes into effect after inauguration day, so it's not for the whole year technically. So it's January 20th, not so it's not necessarily 2025. So you kind of have to look at your purchases January 20th to now versus January 1st to 19th. Anything you purchased is not you're not allowed to get the 100% bonus depreciation. So this would impact some of our clients that may be like investing in like significant machinery and equipment, 3D printers, data center equipment, that type of stuff. We don't a lot of our clients aren't in that space, but those that are, that is an area that you want to look at. Or for like some of the companies in the biotech area, if you are, retrofitting a lab or building a new lab, that's like an area that you want to look at. So I think bonus depreciation is one we've been highlighting with founders. The second thing is QSBS rules. And again, like the dates here get really funny. So any new share issuances after July 4th, 2025 are now subject to new rules where if there are shares issued after July 4th, you can hold them for about 3 years, and as long as everything else checks out, it can qualify for a 50% capital gain up to 15 million as well, up from 10, it used to be 10 million, now it's up to 15 million. And there's a new gross asset test as well, which is like I think 75 million, and it can even be adjusted for inflation in future years. So some of our clients where this is impacting them is if they have like new share issuances or new options that may have been exercised. There's like two different tax implications of depending on where in 2025 those were exercised, which throw in a bit of a wrinkle. For anyone that did fundraising later in the year, I think your investors are going to be more happy compared to if you did it earlier in the year, because now you're kind of grandfathered in under the old rules. Um, so that's the second thing that we've been touching on HR1. And then the final thing is really the Section 174 research and development. So we kind of touched on, previously with Section 174, you have to capitalize your R&D costs over 5 years if those were domestic R&D and 15 years if they were foreign. Starting with tax year 2025, you can now take a full deduction of your domestic R&D costs, but you do have to do it the right way. There's like a few elections you got to make on the tax return saying, hey, we're changing our accounting method to do this now. It's not just like, oh, now I just start deducting all my R&D. And if you're going to do that, you may also want to look at the past. And that's where I'm saying, I think a lot of practitioners are just exploring whether there are some tax planning opportunities there. Could they save their clients some money? In practice with us, we found because a lot of our clients are sort of in net operating loss positions anyway, even with the capitalization, it's maybe a handful of clients we've seen like, okay, they can actually get meaningful cash back. And then there will be an opportunity to spread out that unamortized R&D over 2026 and 25, right, 26 and 27, something like that, where it's going to be like a 2 year sort of spread. And again, we're waiting for like exact mechanics and guidance. The IRS did release a rev prop early in the year, but didn't like fully go into how some of these mechanics are going to work. So we're kind of just waiting for more guidance. And with the government being shut down, all this has ripple effects because now we're going to be waiting a lot longer. So yeah, I would say just to kind of summarize your question, what's back on the table, I would say these are the three areas that we've been focusing in on, zooming in on for our early stage tech client base. At the personal level, of course, there's like the SALT cap is now sort of higher. So for those of us in the Northeast, I think that's hopefully good news for some of us that are paying a ton of state and local taxes. Yeah, those are the three main areas we're looking at for the tech companies.
Oof. I mean, for me, I think it's very much needed relief, which you know, I mean, it's one of those things, especially if you're operating in the Northeast. There's just one of those things where everything's like in one way or another you get taxed out the wazoo, right? And it's hard to keep lights on when and drive innovation and all this jazz while you're trying to get bills paid, right? Keep the lights on, so to speak. And the last 3 years have been rough. I mean, for me, it's just like I think it's for me specifically because I speak with a very specific group of people, right? And unfortunately, the last few years, because of the way the rule sets were, you had a lot of folks who were not. You're not talking about Fortune 100 companies. You're talking about people who I might clear $10 million. I might clear five, right? And it's like I look, we're close. We're so close. We're so close. We just need a little more runway. But you're telling me that the way these rules are, you're saying that I have to pay an additional, hundreds of thousands of tax. There's no way. There's no way. How is this supposed to be driving innovation when I'm negative, right? And you know, now that things are making sense, I think this is where hopefully, the folks who are kind of running like mills. I call them like RD mills, where they just kind of not really doing the work. They're just kind of slapping some things together and like throwing things out and saying, trust me, it'll work, right? As opposed to shops like yourself, where you're actually doing the due diligence and saying, hey, let's let's get the receipts together first. Let's get the fact patterns together. Let's understand the proper way to do things and see if it makes sense, right? And now I'm hopeful, right? Because now we're also getting a lot of calls and questions, right? Of like, hey, like, how does this work? Is it worth it? Or is this going to get me in trouble? Is this regulation what I think it says? Like, et cetera, et cetera. And it's a good way to go about things. But there is a question, and I understand this is going a little backwards. Um, what got you to want to run your own tax shop? I am curious.
Yeah, great question. So I worked myself, my initial career, I wasn't within the Big Four. I was at actually a small firm that worked out of the Garment District in New York City. It's about a 10-person firm, very similar size to, our current firm now. And it was great just working with different small businesses and not-for-profits, especially in the Garment District and around New York City at the time. I was there for about 5 years. I got a lot of exposure to audit, tax, bookkeeping, and a lot of the work, some of the work was on Excel and on a computer, but a lot of it was really, using these large green pieces of, I forget what they call it, 14 column or 18 column. Like it's been a long time since I've seen those, and yeah, I think good riddance to that. But I really learned the old school way of how to do bookkeeping and taxes. Sort of, I think one of the memories I always have is the tax part. One of the partners at the firm, he would not use the computer. So literally, what I would do is I print. The only thing he would use the computer would be to like do online shopping at the
Okay.
time. So what I would do is I'll print the tax return, um, provide, give, say, okay, here's the tax return, here are the work papers for review. And he would sort of write like, how doctors write, where you can't really understand what they, what they, what they're writing. So he'll give me all this feedback back on a green piece of paper and back to me. So then I would look at that. I would go back to the tax software, implement all the changes and reprint. And meanwhile, here I am like printing like reams of paper. What was that, WB Mason, or I forget the paper company.
WB
I
Mason.
think yeah, WB Mason. Yeah, I think I was like constantly filling that printer. So anyway, I would reprint it, give it back to him. He would again give me another piece of paper back with feedback. I would go back to the tax software, do it again. So that feedback loop was awesome at an early age, whilst I was just building my chops to just learn how to do this stuff. And the penalty for not doing it correct was having to run back to my desk, making all those corrections, and then actually burning a tree down pretty much, every time. So that's kind of how I got my initial sort of start in the accounting world. And after that, I worked at Channel 13, which is a PBS station here in New York City. I was like a staff, and became a senior accountant there as well. That was a great experience. It was a not-for-profit. So the schedule was pretty much 9 to 5, 9 to 6. There wasn't a ton of overtime. I was single at the time, and pretty much I used the nights and weekends to kind of build my own practice, because I had worked in one which was relatively small. And I was like, maybe I can try this on the side.
Mhm.
At the time, I think it was Mayor Bloomberg was in office at this time. So this is going about 15 years. There was quite a bit of innovation happening in New York City. There was quite a few public-private partnerships happening in New York City. So the city was investing in like the Cornell Technion, which is now on Roosevelt Island. Um, there was different incubators and co-working spaces sprouting up. And a couple of my initial sort of clients that I was like moonlighting and working with during that time, they started being located at these incubators. And when I walked into one of these incubators, I think it was an NYU incubator in Brooklyn, in downtown, I just saw opportunity. I was like, wow, here's a room full of young, ambitious people. They all want to start a company and they all need my help to like, at the beginning, I was doing office hours. So I would go in, one person would show me a tax notice they receive, and they would want an answer on the spot of like how do I respond to this? And I would try and help them. Someone else may have a question about like, oh, I've got this problem on QuickBooks. I can't send out this invoice, so I'll fix that for them. And another person would be really just looking for strategic advice. So it really gave me a great just learning experience working with these incubators. And after I worked with one, I tried to like network with other people to work with others. And then finally in 2013, I had like a small book of business. And I told my wife to be, I mean, my wife now, but at the time I was like, by the end of 2013, I'm going to basically quit my full-time job at Channel 13 and go full-time into this. So I didn't get fired or anything. Like basically in November of 2013, I gave my 2 weeks notice to my work. Initially, I was like, "Hey, can I work part-time here and then do like so I could like build?" And they were like, "Absolutely not. Like you either work here full-time or
Yeah.
sayonara, pretty much." Yeah. So I just was like, "Well, let me just give this a shot." So I gave my 2 weeks notice. Um, and I just started then. And yeah, ever since then, it's kind of just been growing very organically. And at the beginning, it was tough for me because the interesting thing about working with these early stage startups is just the velocity at how quickly they grow. So one day you could be talking to two founders that are just sitting in like an incubator, and then the next week you come, it's there's four of them. And the next week it's like there's like this compounding effect that's happening with these
Mhm.
companies. And then, but my own firm, I'm not able to have that same velocity or that same compounding. So it taught me the power of like, hey, you got to build a network. You got to work with other professionals. You are not going to be able to do this whole thing you're on your own. There's going to be different subject matter experts or different people that you're going to have to partner up with to kind of start building, a network that can kind of help facilitate and support these clients. So usually the setup for a lot of early stage tech companies we work with is like, hey, they'll work with a small firm like mine, but they may also work with a top 100 firm to help with things like audit or SOC 2 or due diligence, when they're going through an M&A transaction. So, and it's similar on the legal side, like they'll be working with a solo practitioner or a smaller law firm, and then they'll have the big law firm to help on the fundraise and stuff like that. So it's been a beautiful journey over the past decade. And like I said, at this point, we're about 15 people, 100% remote. And yeah, we've really just zoomed into this one niche of working with these Delaware C corps, and yeah, it's kind of like my life's work at this point, and I'm enjoying it.
I mean, I still find you to be quite an interesting person, right? Because I mean, I feel like there's still that old guard thinking of like, look, if we can't service it, then we're not going to do it, right? And I think, call it what you want, right? If you want to call it humility, you want to call it just common sense, like whatever you want to call that, of like, hey, my clients still need this help, and if I can't provide it, I'll go find someone, right? Like that extra step, I imagine, is why a lot of your clients are probably not looking to leave anytime ever, right? And so that has been something that has been interesting to me. But then there's also that idea of you have your own firm, you're running your own firm. I imagine it's taken up most of your like living and breathing time, right? And then you decide to take on the role as chair for one of the communities at the New York State Society of CPAs. Like, what is that? what is that within you? Like that's a next level drive, right? Because it's not so far in the meetings that I've gone to, it's not that you just sit on your laurels and say, hey, well, today's meeting is going to be with Bob, meet Bob, and then you sit in the back. You're actually actively engaging. You're actively driving. What is that?
Yeah, so I think like the state society has kind of been running in parallel with my business. And I think for any sole practitioner or any CPA that's like trying to start their firm, you do need that, I guess, that network around you of folks that can, be that extension, especially if you don't have like a large firm where you can just call like subject matter experts, and that's been really the best part of the New York State Society of CPAs and being within a state society organization is just being able to work with different folks. And yeah, I mean, as far as like being chair of the C Corp community and like trying to keep things organized, and I try to have a slide deck and kind of go through everything. I think what's really driving that is when I got started, and I would at the State Society, and when I would join these meetings, things could get very abstract, where I didn't really understand what was being discussed
Mhm.
in the room. So I just kind of look back to my like, hey, if I was like 24 or 25 again, straight out of school, or I just finished my graduate degree or my CPA, like I just got my CPA license and I'm a newly minted CPA, like how do I make it palatable and easier for them to understand what, the purpose of what we're doing is without just diving into like complicated rev procs or complicated areas of the tax code. So my goal is always to just make things a little bit more digestible for all audiences. And I do sometimes get feedback from some of the senior members on our committee and that they think that's too much overkill. Like they prefer I didn't do
Mhm.
that and just go straight into into the topic. So I'm glad that you see that you don't mind it, but that there is some folks that may feel like it's a bit of a dumbing down of what we're doing if we don't just start like getting into, hey, let's just talk about South Dakota versus
Mhm.
Wayfair. These are the facts, and this is how it impacts. But I think like we just need to ground everything that we do to encourage the next generation and the pipeline of accountants. Because right now, like the biggest issue we have is there is a perception that automation, AI, and outsourcing are going to decimate the profession. And I think it couldn't be further from the truth, but it's hard to beat that wave. And sometimes the perception then does become the
Mhm.
reality when everyone thinks that, hey, like this AI thing is just gonna like take my job. Or so then what's happening on the if I'm a 18-year-old going into what should I, or I guess at 20 you declare your
Mhm.
major, right? Like let's say I'm 20, I have to declare my major. I'm entering my junior year. I'm not sure if I would put accounting because everything I see tells me that the robots or AI or someone overseas is going to do this. And from my own experience, I know that that is not the case today. It likely will not be the case in 10 years from now either. AI is a tool. Um, if something goes wrong on your taxes, you cannot call Sam Altman to pay your taxes. This is something that you're going to have to deal with. Um, so I think that's the part of the pie that is not really being reflected. Part of that is because of just the perception of the marketing and how it's being driven out there. Like, and maybe some of the tech companies need to take a bit of responsibility there with their messaging
Mhm.
and try to kind of hone it. And I have seen the one good thing that has been seen with some of the companies that have got recent funding, like they've raised their Series A or B rounds in the accounting space, is they are taking steps to attend accounting conferences, engaging with accountants to sort of build that relationship and understanding like, hey, we're not just gonna uh, take everything away because there was a perception at a point that and something that was being bandied about accounting circles was that oh let's not the accounting profession let's not make it become the next Uber is kind of what I used to
Mhm.
hear like oh we're gonna go the way of the Uber drivers like that's what was sort of and I think enough time has now passed since Uber went public and everything, and even since ChatGPT was launched in late 2022, where we see that's definitely not going to happen. But I think we have a pipeline problem, and so part of my work with the C Corp committee and what's driving me is just to make it palatable and digestible for the next generation. That's really why I do what I do.
And I do enjoy a lot of the communities, right? But what I particularly enjoyed for me, there's this feeling of additional care, right? Because like when I look through some, like, when I do get there like right early, I do like to talk to the members to get a sense of it's a culture. Each community, like the society as a whole, yes, but within the chapters, absolutely. But also within the communities, there's a difference in culture from one community to the next, right? And when you go through the slide decks, there is a little bit of it doesn't feel to me that there's like a hey, let's just slap some random stuff together so we have like talking points and move on. There's a care that seems to be put in to preface to say, hey, like these are the things that are top of mind for us right now. Like, and if for whatever reason, for me, the other side of it is I think there might be times where I have to mute and I have to attend something else. But at least if I see text, and maybe this is the problem with the generation these days where like there has to be subtitles for everything and whatever. But like again, there's care in there. And look, if the argument were to say, hey, it's taking up too much time, okay, maybe there's a solution to that as well. But for me, like the crux of it will still be that it's good to see that there are people who at least put the effort in and say, hey, yes, there are veteran people. That yes, there are people who have been in this industry, and maybe this is kind of too dumbed down for you folks, right? It's not a shot at them because you earned the right to say I'm a veteran in this industry. However, there are also people who are now trying to get into things, and you are talking like 8 levels above my level of understanding. Unfortunately, you're going to get to a point where I don't see any value. Like I just tune out because I don't know what it is you're talking about. There's no context for me,
Exactly.
right? So I do appreciate the amount of effort that you've been putting in. I know there is a lot more in the future that I'm probably like my curiosities never end. I think this busy season is going to get quite busy. So for those who need to reach out or and whatnot, where can people reach out to you?
Yeah, I think the best way is through our website. So it's www.shaycpa.com. I'm also very active on LinkedIn, so always feel free to just shoot me over a LinkedIn request. And yeah, I'm part of the New York State Society CPA C Corporation tax community. So if you're interested in like working with tech startups or especially on the tax side, yeah, we're always welcoming members to our committee. And yeah, join these committee meetings. Kind of what Alex alluded to. Basically, we kind of pick different topics each month. For instance, this month there was like a topic regarding equity compensation and 83B elections and things like that. We've also talked about R&D tax credits in the past. So we try and kind of go across different topics. And as Alex said, try to make it digestible for people to kind of understand and not make it too overly complicated. Because, yeah, some of my early experiences, I felt like I was the dumbest person in the room. But then when you actually peel back the onions and the layers, what you kind of see is some of the professionals may be talking about something that's a very specific fact pattern for a client that they're working with. And it's not necessarily it's overly complicated. It's usually just like someone's talking about something very specific to them. And in some ways, it's a bit selfish because if you're just going to be going over something that's like just your own issue for this one fact pattern for this client that may or may not have even paid you for this service, yeah, it can be, you just kind of have to like know the
Mm-hmm.
room. Like who else is in this room? And especially when we're on these Zoom calls with like 50, 60 other people, like we want to try and make things digestible. But yeah, that's let me get off my soapbox on that. Yeah, best way to contact me, LinkedIn, our website. If you're an early stage tech founder looking for a firm that understands how you work from day one, they understand cap tables, they understand stock options, we understand different rounds of funding, bookkeeping, tax compliance, we're your firm, shaycpa.com.
And I'll leave all the information in the description box. But Mr. Shrimanker, thank you so much for your time. I hope to do this again in the future. But as always, Thank you guys for joining us, and I guess I'll catch you guys on the next one. Peace.
Thank you, everyone.